In the unpredictable world of trading, knowing whether a candlestick will break through or reject a specific price level is crucial. Many struggle with this, but fear not. There is a free indicator that can help. Today, we'll explore this indicator and discover a winning strategy. So I'm in TradingView, and this is what our chart is going to look like when we are done setting up our indicator. I'll quickly cross out these indicators so I can explain the settings of the indicators from the beginning. So let's first add our main indicator to the chart. To do this, head over to the Indicator Search tab and search for the Breakout Probability Indicator. After this, select the indicator made by Zierman and add it to the chart. This indicator is so powerful and well made that it has received an Editor's Pick Award. It shows you the exact probability of a particular point in the price action being reached, allowing you to make a prediction of the next candlestick that is based on data causing there to be a high probability of you being right. It's important that we first understand how the indicator works. As you can see, the indicator plots levels on the chart along with the chance of the level being hit. So in this case, we can see that there was a 65.8% chance that the candlestick would reach this level. And as you can see, the level was indeed reached. The numbers that are plotted on the chart aren't random. In fact, the indicator predicts the direction of the next candlestick by analyzing the patterns of green and red candlesticks. It separates them by the color of the previous candle and assigns scores to them based on if one or more lines were reached. Then, the indicator looks at how many candles in the past have met those criteria and shows that as a percentage value for each line. This way, the indicator can showcase accurate percentages of whether or not the next candlestick will break the previous high or low. We can also see that there is a table in the top right corner of the screen, which shows the total wins and losses, allowing us to see the average win rate. Keep in mind that this is by using the most basic strategy. Later on in the video, we will show methods to increase the win rate. If we head over to the indicator settings and click on the inputs table, we will see the following. Firstly, there is a percentage setting. This setting allows us to change the percentage between the lines. Simply said, you can make the lines closer to each other or further apart. So making the step 0.5, for example, will cause for closer lines to be plotted. It's important to keep in mind that when trading in lower volatility markets like the Forex market, you will probably need to lower the step value. This is because an increase of 5% in one candlestick on a Forex pair is very unlikely. Another interesting setting is the number of lines. You can use this to decrease the number of lines that the indicator plots to make the chart less cluttered. You can also disable or enable lines that have a less than a 0.0% chance of being hit. By default, this is enabled. The other checkbox is for disabling or enabling the statistics panel. Keeping everything at the default settings works best for the strategy and methods we will be showcasing. However, since we won't be using the statistics panel, we will be disabling it to make the chart less cluttered. Now that we know exactly how the indicator works, let's take a look at how we can properly read and use the indicator. The most basic way of reading the indicator is by looking at the percentages and seeing if the price action is going to form a green or red candle. As you can see here, there was a 65.8% chance of the candlestick being bullish and breaking above the previous candlestick. And if we take a look at the candlestick, we see that it indeed broke above the previous candlestick. Even though this is the easiest way of using the indicator, I wouldn't recommend using it on its own with this method. In fact, there are a lot more profitable ways of using the indicator. So let's take a look at those. But before that, if you don't feel like analyzing prices yourself, you can join my free Telegram group. Here I share daily the buy and sell positions I open. The link is in the description below this video. For the second method, we will first take a look at the prediction of the next candlestick on a higher time frame. In this case, we are using the 4-hour time frame. As you can see, according to the indicator, there is a high likelihood of the next candlestick crossing below the previous candlestick. Keeping this in mind, we will switch to the 15-minute time frame. On the 15-minute time frame, both buy and sell signals are provided. However, since the indicator was showing a sell signal on the 4-hour time frame, we will not enter into a buy position on the lower time frames since this would go against the greater trend. So this is the second way. The third way we can use the indicator is by utilizing the levels for your stop loss. In this example, we can see that the chance of the next candle reaching this level is too low. Along with this, we can also see that there's a high % chance of the price breaking above the high of the previous candlestick. This means that if we would enter into the position, we can place the stop loss at the level which has the lowest percentage of being hit. This helps us statistically lower the chances of the stop loss being hit. Now that we know how the indicator works and different ways we can, let's take a look at the other indicator we will use in this strategy. So we will access the indicators tab and search for the 10 and 1 different moving averages indicator. After this, select the indicator made by Hymanshu and add it to the chart. Now head over to the indicator settings. We will be adding 3 EMAs to the chart, so let's select these. After this, we will change the values of the EMA. The first EMA will have a value of 21. The next one will have a value of 50, and the last one will have a value of 100. Finally, let's change the colors of the EMAs. That will help distinguish these on the chart. That was all that we needed to do. Now let's take a look at how we will be combining the indicators to enter into a position. First, we will look at the prediction made on the 4-hour time frame by the breakout probability indicator. Based on the probability of the next candlestick being lower or higher than the previous candlestick, we will choose a bias to have for the 15-minute time frame. Then we will switch to the 15-minute time frame. On the 15-minute time frame, we will be looking for signals provided by either the EMAs or the market structure. If the signals are congruent with the signal provided by the breakout probability indicator on the 4-hour time frame, we will enter into the position. Now let's go through the rules for entering a buy example. So for a buy trade, first of all, as you can see that our price is moving above the 3 EMAs, indicating that the downtrend was broken and the price is in an uptrend now. We also see that the breakout probability indicator is showing us that there is very high chance of the price breaking above the previous candlestick. This means that we will have a bullish bias. So now let's switch to the 15-minute time frame. On the 15-minute time frame, we can see that at this time frame, a pullback has occurred to the 100-period EMA. We also see that the price has started to reject the 100-period EMA, and after some time, it closed above the 21 EMA. So as the rejection is confirmed, we can enter into the position. So I'll open a buy position here. It's a good idea to place the stop loss at a level that has an extremely low chance of being hit. However, if you see here the level is too far away, you can place the stop loss at the recent swing low. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. If you have some confusions, they will be surely cleared when we go through a sell example. If you don't feel like analyzing prices yourself, you can join my free Telegram group. Here I share daily the buy and sell positions I open. The link is in the description below this video. Here we see that there was a downtrend playing out on the 4-hour time frame. Along with this, we also see that the breakout prediction indicator is showing us that there is a high chance of a sell candlestick. Because of this, we will have a selling bias on the 15-minute time frame. So we will switch to the 15-minute time frame. On the 15-minute time frame, we see that the price is below the 3 EMAs and is making lower lows, indicating a sell trend. So let's enter into a sell position here. This time, the zone that is unlikely to be hit is close to the price action, making it a realistic stop loss point. So let's place our stop loss here. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. I hope you now better understand how the breakout probability indicator can be used, along with how you can integrate it into your own strategies. If you enjoyed the video, please leave a like, subscribe to the channel, and also hit the bell. Thanks for watching the video till the end. I'll see you guys in the next video.